Hey everyone, this video is on 401k plans. Pretty much unanimously, if you work for a company, a corporation, most individuals have some form of a retirement plan, whether it's a 401k, 403b, some form of deferred compensation. So I wanted to provide some education on 401ks in general, how they interact with a comprehensive financial plan, some of the advantages and some of the disadvantages. Every single financial vehicle has both. So regarding the 401k, the two biggest advantages that I see as an advisor are as follows. Number one is traditionally there is some form of an employer match. So they may say if Sally puts in 5%, we will also match her 5%. So that's additional funds that can go into your 401k plan, your retirement plan, and that's a benefit. Second, which not a lot of people talk about, but I think it's one of the biggest advantages, is it's systematic. It's right out of your paycheck. You don't even think about it. It is just automatic. And I often say these financial institutions, they're pretty smart. If they knew that, or if they knew that you had to make a deposit by yourself every time that you got paid, the likelihood of you doing it is slim to none. So they just make it automatic. Those are the two biggest advantages. It's also important to look at some of the disadvantages or just other aspects, I would say, of the 401k. One is that money, for most intents and purposes, is not liquid. That money is long-term money. It's pegged for 59 and a half. So if you needed access to funds prior to 59 and a half, it may not be the best place to go get the money, especially if it's pre-tax money. There are loan provisions. Traditionally you can loan up to $50,000, but again, you have to pay that loan back and it's going back into a pre-tax bucket. There could be some tax implications there. Second is, depending on the investment options, they may be limited. Some 401ks have great investment options, some might not be so great, but you are limited to the investment choices that are in your plan. The biggest question we have to ask ourselves is, what might taxes be when we go to retire? So when we go to retire, a 401k is a government-controlled plan. Specifically, if it's pre-tax money, when you go to take that money out of retirement time, every dollar you pull out of that plan is taxable. It's taxable federally, and then depending on the state that you're in, you may owe state tax as well. So you have to think, where might taxes be? And the old adage was, I'll be in a lower tax bracket when I retire. Now that might not be the case. Certainly our country is in a significant amount of debt in the trillions. Our incomes, hopefully for most of us, will continue to go up. It just might not be the case. So I advise for consideration to make sure that that pre-tax bucket is not the only bucket. And some 401k plans have offered Roth provisions, which is the antithesis of pre-tax. You pay the tax today, you invest the money after tax, and then you can make those withdrawals tax-free. So whether or not if Roth or pre-tax is the right combination, certainly you have to speak with your accountant, speak with your financial advisor. But certainly what I am a proponent of is balance. You want to have a balance not only between retirement accounts, but also investment accounts and assets that you have access to prior to 59 and a half. Hope that helps. As always, if you have a question or would like to just connect with our team, feel free to leave a comment or reach out to us directly.